Welcome to the Rick Helps Real Estate Show. Pat is not with me today. He is at a conference in Detroit. In fact, I think he's on his way to the airport right now. And boy, a good time to be out there and learning about the lending business with one of the largest lenders that we have in the country, United Wholesale, on a day like today. So I'm going to talk a little bit about the Fed chairman's comments, and they're pretty well, I don't want to use the word alarming, but holy cow. So let's get started here. If I look at my 7-day moving average, which is the number of homes that have come on the market the past 7 days and the number to go under contract, this number coming on gets lower and lower. We have 19,000 homes on the market today. 3,866 of those are new listings, with only 28 go under contract. Now that 3866, that's the lowest number we've had in a long time. And you can see how that's just gone down and continues to go down. And that's happening nationally. I was reading some information from Redfin. Good afternoon. And so at this point, when we look at these numbers, you have to ask yourself, what's the greatest potential for movement? Stream Elements bot running. Oh, oh, great. I don't know why that's running. So anyway, what's one that's got the greatest potential for movement? Sales dropping or listings increasing? Since sales are down at some of the lowest levels we've seen, I expect the latter to occur. But what we're running into is that people are choosing not to list their homes for all the reasons that we've kind of talked about. They're sitting on low interest rates. They really don't want to move. And even the CEO of Redfin said that according to their numbers, many people are either canceling their transactions or they put their house on the market, didn't get the price they wanted, so they just pulled it off. Just said, I'm not playing. Chairman Powell, he got a little aggressive today in his speech and said he's going to warn us of some pain ahead. And he gave us a beautiful 1,000 point drop in the Dow today. And he said that they will use our tools forcefully to attack inflation that's running near its highest level in more than 40 years. Forcefully. Yikes. He also added that higher interest rates likely will persist for some time. The historical record cautioned strongly against premature loosening policies. So basically what he's doing is he's sending a message out there that said, for those of you that thought I was going to pivot because there's an election coming up, or pivot because I see a slowdown in the economy, I'm not going to pivot. And recession be damned. He made a lot of references back to 1979 with Chairman Paul Volcker, and how hard he had to clamp down to get in front of inflation. And he mentioned him 3 times in an 8-minute speech. And in that 8 minutes, he's basically laying out and saying rates are going to have to go up and they're going to have to stay up. He also said the thing about inflation is when the consumers and businesses see inflation and they think we're going to have more and more of it, they act accordingly. And that actually makes inflation last a little bit longer. What he means is they increase the price of their goods that they're selling, and then they also increase the wages to help keep up. So anticipating inflation has that kind of an effect. So he said, so if I see 1 or 2 good months, that's not going to make me pull back. This has to be consistent. Our job is to get us back down to 2%, and we intend on doing just that. He also said we're going to be aggressive at the September meeting. So that's going to be an interesting time. We already know he's going to go up at least 75. And here's the markets today reacting. It says they're negative, significantly weaker. We will see an update on that Monday afternoon. I don't have access to the numbers like Pat does, but you can tell it's pretty rough. Now, I mentioned Redfin and the CEO, and he said, which I find curious here, since then, the housing market has since recovered somewhat. He's talking about the big dip that we had in May and June. We still have since then, the housing market has since recovered somewhat, he noted, but we still have, even for the details that are under contract, a very high cancellation rate. It's hard to put deals together because the economy is so volatile at this time. He also said that what we're seeing is incentives in new construction averaging and going up about $30,000. Go to the design center, go shopping, or getting better rate buy downs. They aren't really lowering their base price at this time, but they are about to. And this is what we're seeing here. We're seeing that our listings have gone up and they've plateaued. We've talked about a listing ceiling before on this channel, and it's looking like it's happening. It's just, in fact, the CMI in some of the cities have actually improved because sales came up just a little bit and listings stayed flat and new listings came down. So it shifted a little bit towards favoring sellers in some cities like Chandler. And then we go and I look here, and this is the closed sales over list price that we looked at a lot when there were all these bidding wars going on. And you can see that we're down to only 20%. So these are contracts that were written last month. 20% of them went over their asking price. But look at the dollar amount averages here, 5,000. Remember when we used to see 15,000 to 20,000 every time? Well, that number has changed dramatically. So we're seeing this giant slowdown on both sides. Remember when we had the big debacle in 2008, we went up to 55 to 58,000 homes on the market. Nobody could get a loan. Lending crashed. Credit markets crashed. Everything went down. Now, everybody's just putting on the brakes. Buyers are waiting. Sellers are waiting. The only activity that's going on is the people that desperately want to buy or feel like there's an opportunity out there, or sellers that have to sell. So that's the market that we're sitting in right now. Now, I've managed, a couple of you have reached out to me on this channel, and we went out and did some home shopping, and we actually did pretty well the past week or two. We got an open door listing that countered back with us, and we pulled them down. They had two major price reductions. We pulled them down another 30K. So that was really cool. We had another listing we were looking at, and they had come way down in Gilbert or Chandler, way down in price. And they were the lowest price per square foot anywhere to be found down there. And we still didn't bite. My buyer said, the math isn't working for me. So I said, well, take your time. Don't ever buy a house in a hurry. Take your time. And lo and behold, the seller's agent reached out and said, hey, how about this price? And we met with his financial person, took a look at it. The math worked, and we said, let's go. An incredible price reduction. Tyler, we went from 0 new home listings. Now all the homes are listed, and the new listings we'll get from people, companies who really need to sell. I think you're exactly right. The only people that are going to list now are people that have to. The other thing is, from what we're seeing right now, I mean, if you're sitting on a low interest rate and you're seeing the value of your home start to come down, what's your incentive to put it on the market? Why do you have to sell it? Even if you end up upside down. But I mean, people that bought in 2019, 2020, they got a long road to go before they end up in negative equity territory. But if you bought at the beginning of this year and you got a really good rate, because they were really good in January, February, March, and you end up upside down, what's the incentive to sell? I mean, I've been upside down on so many houses, it makes my head hurt. You just wait it out. So what's the incentive to get in? Because if you sell, if you're upside down and you sell, first of all, you're going to have to cut a check because you're going to be ended up owing everybody money. So you're better off staying put. And you may have had plans where you only want to be there 2 years. So that might hamper your plans, but you should never really go into a home purchase if you're planning on living there less than 5 years. So those of you that are getting close to a negative equity situation, and we aren't seeing that in sales yet, we're seeing that in asking prices coming down, but we're not seeing, and I'll see if I can pull up that chart here. Let's see, asking prices, average sales price. It's only when I'm trying to find it that it gives me a hiccup here. By topic, list pricing, here we go. Come on, you can do it. I just had it. Here we go. Active, all types, daily chart, 2-month view. And you can see here's the list pricing coming down. $303. We had a peak back here of $312 per square foot. So listing prices are drifting down, not in panic territory yet. I have a comment here about Sun City owners bought their home for a dime. Now they own these homes. They don't need to sell. Of course not. Most people that buy in Sun City, Sun Lakes, the over 55, they're planting that there. They're staying there until the inevitable. So there's no incentive to get out. And we're seeing, I had a comment the other day. Shoot, I wanted to remember this one too. Somewhere along the line of, Rick, you seem bullish on the market. I said, well, I'm kind of ambivalent. In the short term here, for buyers, if you can get a deal and it fits your budget, then I'm bullish. If you're nervous, if you still feel that we're overpriced and you're willing to wait, there's certainly nothing wrong with that. If you're trying to sell because you just want to see what you can get, there's no point in that. I'd wait. If you have to sell, just don't price at March and April pricing. And I'm seeing some of that. Open Door tried it and they failed miserably. That's why they're reducing their prices by 100 and 150,000. So just don't get yourself in that situation. I want to see what I can get for my house. I can tell you. I mean, if you come to me and you want to list your house and you say, Rick, I want to test the market, I'm going to say, let me be your second agent. Because that's going to be the one that comes in and says, well, you got to lower your price. So I'll be the second guy. First guy never got it sold. So do you have any questions about the market while I have you on here? We are hoping to we're going to try and interview the CEO of United Wholesale Mortgage out in Detroit, but evidently his schedule's way too tight and we couldn't get him on, which I was kind of disappointed, but I thought it was going to be a little bit of a stretch anyway. So Pat was unable to bring him on. I think this upcoming week, as we get into Labor Day, you're going to see sales slow down considerably. We're going to see that dip in the chart again. I'm very curious to see how low that 7-day moving average gets on homes under contract. So we're sitting at a floor right now of about 2,700. Sometimes on a holiday weekend, it gets down to 2,400. But I don't know. I'm going to see what happens. Can you pull up evictions and filing data? No, I can't. I don't have that on here. I occasionally get to see a report on that. The thing I caution you about evictions and filing data right now is, remember, we're still wringing out the moratoriums. So, and then there's a backlog in the courts. So there were people that didn't have to pay rent for a long time. And now, the landlords are coming in saying, time to pay up, let's go. And they say, well, I'm not going to pay you. Well, and you got to kick you out then. That takes time. If you've ever been down there, there's just one case after another. And I was told you could be waiting a year if you wanted to get some court action done on your tenant. Better to buy with cash now or 1 year from now. If buying cash when you see the most anxiety, I think, if with anxiety comes asking price reductions. And I think that we're starting to see some of that start to roll in right now. I think around November, December, we'll start seeing a lot more anxiety, and we may see people that have to sell lower their prices, but it all depends again on a year from now. Are we still going to be at 19,000 active listings on the market, or is it going to be considerably higher? And if it's considerably higher, it looks like it's trending that way, then I would say wait. So what you're going to want to do is you're going to want to watch the active listings and see how they're growing, not just here, but also watch and see what's going on nationally. See if you spot a trend, because the higher that number gets, the more deals that you'll have out there, and you'll feel better about your cash purchase. What's the days on market for homes over 1 million? I would think you'd have to pay, you'd have too much money to buy a home in that category right now. days on market, actually Paradise Valley and Fountain Hills are not doing too bad, simply because, and I'm going to see if I can look it up for you here, Tyler, simply because there haven't been a lot of listings show up. So let's look at this for a second here. Their total inventory is pretty low. So let's filter this down and go just above 1 million. Okay. So I'm going to go on up, and we're going to get our number. It's percolating, cooking right now. And we're sitting at 110 days. They're always larger anyway. Look at this. This is their average is 369 days. So we got to a low of 45 days. You put in everybody, all price ranges, that changes dramatically. We're at 66 average days on market. So the higher you get up, the longer it takes to sell your home. It's sometimes that luxury market, it takes a year to get that home under contract. Patience, my friends, patience. So, well, look, I hope everybody has an absolutely fabulous Friday. Take on the weekend. Have a great day. Take care.